Okay, one thing you need to understand is the fact that working capital is a very practical concept in performance management, even in finance, because everybody needs working capital. Just as you have where you have currently, if you don't have some element of working capital, you won't be able to attend you won't be able to attend this class. Of course, for you to attend the class, you need to have data. And that data, you need money, you need cash. You need money to purchase the data. If you don't have the data, if you don't have the money, you won't be able to purchase the data. And if you can't purchase, if you don't have the data, then you won't be able to attend the class. Also, as an individual, you need to commute yourself to and fro from office to from office to your home, then to and fro. If you don't have the means for transportation, certainly you may not be able to go to the office on that day. If at all you are going to go to the office, as a result of it, you go and borrow the money to go to transport yourself. You want to eat, you need money. If you don't have money to buy food, certainly you are going to stay you are going to stay hungry for that period. All right. So that's for you want to buy clothes. If you don't have the means to buy the clothes, in that case, of course, you won't like it. So that's to tell you the importance of working capital. Not only that, just as you have as an individual, you want to rent, you want to pay for your rent, and the money is not readily available, you will notice how panicked you will be. The landlord will be disturbing you, harassing you. Oh, your rent is due. Your rent will be due in the next in the next 1 month. You started running here and there just to ensure that you pay your rent. Then on the D-Day, if you don't have the means, you know how you will feel. That is to tell you the importance of working capital. If somebody borrowed you money and you have promised that you are going to pay back by so day, when that day come, you are expected to pay and you don't pay, you see how you'll be hiding for your debt or from your creditor, because you don't want that person to see you. Even if it's a friend, you'll be avoiding him or her because you don't have the means to pay your debts and you don't know what to say again. That's why you are hiding. So this is why I'm saying that working capital is a very important concept in performance management or in financial management. Therefore, what is working capital? Now, before we even go to the definition of working capital, let's go back on the perspective of a company. As a company, you need working capital to pay salary, to buy supplies, to run the business smoothly. You need working capital to settle your short-term obligation as and when due. All right. So if the working capital is not available, there won't be smooth operating the operating the business operation may be curtailed as a result of that. Because you need money to pay salary at the end of the month. Your staff that have worked for you for about a month, they're expectant of their salary. If at the end of the month you cannot pay salary, that's a trouble. If it's an issue that persists over time, your qualified employee or your qualified staff may leave your company for your competitor. And that's why you have to guide against it. That's the essence of of managing the working capital. Therefore, what is working capital? Working capital represents the difference between the current assets and current liabilities. I take it again. Working capital represents the difference between current assets and current liability. Is the amount required for the day-to-day running of a business. Okay, working capital is the amount required for the day-to-day running of a business. Working capital is needed to pay salaries, pay rents, buy supplies, settle short-term obligation. So if this is not readily available, it will have a negative repercussion on the success of the company. So that is working capital. On the flip side, the working capital management represents a judicious and efficient management of each component of current asset and current liability, including inventory, accounts receivable, prepayments, cash and cash equivalents, as well as account payables. So the efficient and judicious management of each component of current asset and current liability to ensure liquidity of the business is what we call working capital management. How do you manage your inventory? How do you manage your cash? How do you manage your account receivable? How do you manage accounts payable? This is what we want to discuss. All right. Now, the essence, the primary purpose of working capital management is to ensure that a company is liquid to meet short-term operating expenses, to meet short-term operating expenses and debt obligation. That is essence of working capital management. The primary purpose is for you to, as a company, to be liquid enough to meet your short-term operating expenses and as well as the debt obligation. So the short-term operating expenses are those ones I just mentioned to you the other time. You need money, you need cash to pay salary, to buy supplies, okay, to settle short-term obligation as they become due. You want to pay for rent, you have money to do it. All right. So that is for that. Okay. Now, that will take us to the next concept that we want to discuss in working capital management. What do you understand by working capital cycle? What is working capital cycle? Working capital cycle represents the length of time between when cash is paid to acquire raw material and when cash is finally received from debtors through sales. So you spend money to purchase raw material. You convert the raw material to work in progress. Work in progress is transformed into the finished goods. Customer will come and buy. Once customer buy, they can buy in cash or on credit. Whichever way, money you are going to pay cash, you are going to pay you back. You are going to pay the money or cash. So in this case, you have recovered your you have recovered your cash. So and that's why we are saying that working capital cycle is the length of time between when cash is used to purchase raw material and when cash is finally received from debtors through sales. And the shorter the cycle, the better for the company. And of course, the longer the working capital cycle, the more capital is tied up without yielding any returns. All right, and you have to avoid that. That is essence of managing this. You must know how long does it take you to convert your cash to raw material and to finally receive your cash when you make the sales. So that is what is called operating cycle. It can also be called cash operating cycle, working capital cycle, or simply put, operating cycle. All right. Hence, companies must strive to reduce their working capital cycle by collecting account receivable quicker. All right, quicker, or they can decide to stretch, or they can decide to delay the accounts payable. All right, to the supplier. They won't pay the account, they won't pay the supplier on time. They can delay it. Of course, once a company does this, that can impair the reputation of the company from with the supplier, because the supplier will think that the company is not credit worthy. All right. However, there should be a form of a negotiation between the company and the supplier, saying that, see, I owe you, and this is when I plan to, we agree that I'm going to pay. But currently, we are working to make your payment. Please give us additional few days, few weeks, or a month for us to make the payments available. Once there is understanding ab initio, then nothing will happen. Your character, your integrity, your credit worthiness will remain intact. All right. Now, examiner can ask you to explain working capital cycle. So after saying all of these things I'll be saying since, then you need to draw your working capital cycle. So how do you draw your working capital cycle? Diagrammatically, I've already told you. You are starting from the cash. You are spending cash to purchase raw material. This raw material is transformed to finished goods. Customer will come and buy the finished goods. All right, customer will come and buy the, work in progress first. Raw material is transformed to work in progress. Okay, work in progress. Then, of course, this work in progress will be transformed to finished goods. Then customer will then come and buy the finished goods, either on credit or on sales. All right. So with this, whichever way cash has been collected, so the company has recovered the cash spent initially to purchase the material. So this is working capital cycle. All right. Now, how do you compute working capital cycle? Before we go to how to compute working capital cycle, company must establish policies or guidelines relating to working capital management. And this policy generally aimed at managing the current assets as well as the current liability of the business in order to ensure that the company is liquid, all right, to meet short-term obligation as well as other operating expenses. So it is important for the company to establish a policy. Once that policy is in place, that will guide everybody within the organization going forward in how they are going to manage the working capital. Because as a policy, everything that has to be there must be there. How do you manage your cash? You've written it down in a document to serve as a roadmap. How do you manage your inventory? How do you manage your cash? How do you manage your accounts receivable or your account payable? You have documented it. So because it is documented, everybody will reach out to it whenever they want to process account payable, for example. All right. Okay. So that is for that. Now, how do you then calculate your working capital cycle? How do you calculate your working capital cycle? There are 5 components of working capital cycle. One is raw material conversion period. 2 is work in progress conversion period. 3 is finished goods conversion period. 4 is debtors collection period or debtors conversion period. Then 5 is creditors payment period. Of course. Now, first thing first, before I demonstrate how to calculate raw material conversion period, you must know what is the meaning of raw material conversion period, what's the meaning of work in progress conversion period, and all of that. So when you talk about raw material conversion period, it represents the number of days raw material is held in store before going into production. You know, when you purchase raw material from the market, you are going to keep it in your warehouse or in your store. All right. You purchase the raw material from the market, you take it to your store or your warehouse in your company. So it will stay there. From your warehouse, you are going to issue out the material for production. Now you want to know how many number of days do those materials stay in the warehouse before going into production. That is the raw material conversion period. And it is computed, raw material conversion period is computed as the ratio or is computed as raw material divided by raw material purchase. All right, it's computed as raw material over purchases. Okay, multiply by 365 or 366, 360 days, whichever one that examiner has given to you or you choose to use. All right. So that is how to calculate raw material conversion period. That is raw material divided by purchases, okay, multiplied by 365 or 360 days. So that's the formula for calculating raw material conversion period. And I mentioned to you that raw material conversion period represents the length, the number of days raw material is held in store before going into production. Then the second one is work in progress conversion period. The work in progress conversion period is the length of time in the production cycle. All right. Recall the other time. The material is in the warehouse. You issue out the material for production. All right. So you want to know how long does it take you to convert raw material to work in progress? How long are you in the production cycle? This is what is called work in progress conversion period. And it is computed as work in progress divided by cost of sales. Okay, work in progress divided by cost of sales. Cost of sales is the same thing as cost of goods sold multiplied by 365 days. All right. Then the next one is finished goods conversion period. The finished goods conversion period represents the number of days finished goods is held in the warehouse or in store before being sold. After you have finished production, you have converted your raw material to work in progress, then work in progress is transformed to finished goods. Of course, you are not going to leave the finished goods in the factory or in the production. You are going to keep everything in the warehouse or in your store where you are going to where it will be ready for sales, where you'll be taking it to the market to sell. So you want to know how many days does the finished goods stay in the store or in the warehouse before being sold. All right, that is what is called finished goods conversion period. The number of days finished goods are held before being sold. All right, and it is calculated as finished goods divided by cost of sales or cost of goods sold multiplied by 365 days. The next one is debtors collection period or debtors conversion period, which represents the number of days credit is given to customers. Okay. Debtors conversion period or debtors collection period represent the number of days credit is given to customer, and it is computed as debtors divided by credit sales multiplied by 365 days. The last one is creditors payment period. The creditors payment period represents the number of days credit is taken from supplier, okay? Number of days credit is taken from the supplier, and it is computed as creditors divided by credit purchase multiplied by 365 or 360 days for a year. Now, at times, examiner may want you to use average figure. Examiner may want you to use average figures. Therefore, if you're asked to use average figures, then in this case, it will be opening raw material plus closing raw material divided by 2. That will give you the average raw material. Then you now divide it with the purchases. Again, for the work in progress, opening work in progress plus closing work in progress divided by 2, then divided by cost of sale. Okay, multiplied by 365. If it is finished goods, opening finished goods plus closing finished goods divided by 2, that will give you the average finished goods. Then you now divide it with the cost of sales, then multiply by 365. The same thing applies to debtors as well as the creditor. Opening debtors plus closing debtors divided by 2, that will give you the average debtors. Then you now divide everything by the credit sales, then opening creditors plus closing creditors divided by 2, that will give you average creditor. Then you divide it by the credit purchase multiplied by 365 days. So this is how to compute. This is how to compute the working capital cycle. Now, what I just explained so far, they are just the formulas that you are supposed the meaning of each of them, then how to compute them. Now, whenever you are asked to compute working capital cycle, like I said, there are 5 components. So calculating what you are going to do is that, say, calculating operating cycle, whether you call it operating cycle, working capital cycle, or cash operating cycle, is the same thing. So first thing first, you need to go and do your workings for the 5 of them, depending on the one you have in the question. At times, it may be only 2 or maybe 3. At times, the examiner can give you the entire 5 components of the working capital cycle. So whichever one, just go ahead and do your workings. All these things I just explained earlier. So go and do your working using all those formulas. So as you are done, then you come and post. If you like, you can say number of days raw material is head, or you can say raw material conversion period. Whichever one you use, you are good to go. Okay, you come here, you say number of days, raw material is head. Whatever you have calculated, put it there. Remember, it must be in days. Then the second one, number of days, work in progress, number of days in production cycle. All right, number of days in production cycle. That's your work in progress conversion period. Then the third one is number of days finished goods is head in store. Put it there. Then you calculate debtors, collection or conversion period, or just to be consistent, since you want to, so you can say number of days, credits is given to customer. So you add up the 4 of them. This represents the gross operating cycle. Gross operating cycle or working capital cycle. Then you less number of days credits is taken from supplier. That's your creditor's payment period. Then less from the gross working capital cycle. So that will give you the net operating cycle or working capital cycle or cash operating cycle, whichever one. So that is for that. But you must first of all calculate your working. You need to do your working first before anything. And you have to show your workings. So that is as per that. At this point, we can then have illustration. We can have illustration before we go to other areas of the inventory management and all of that. Now, before that, let's talk about working capital ratio. Let's talk about working capital ratio. Okay, well, we are going to use illustration to demonstrate that, but for now, let's have an illustration. So just to demonstrate our understanding on the working capital cycle. Okay, working capital cycle. Let's solve the latest illustration. The question ICAN that was tested in May 2023. I think that's, is it in this material? Let me see. That's a question on Vesta Pricey. That's the name of the company, Vesta Pricey. I'm not sure. Do you have it in this material? Oh, it's not here. Okay, let me see. Let me use the ebook. Let me use the ebook. The question is not in this material, and that was the last question tested by ICAN on the working capital management, especially working capital cycle. Okay.
Sir,
yes.
Please use question that has opening and closing.
let's go to, let me stop sharing this. Okay, okay, capital management. Let me quickly, where are we? What's the name of the company, sir? Control. The name of the company is it Berlusconi? Berlusconi. Yes, that's it. I've seen it. Okay. Um, yeah. All right. So like I said, the last question tested by ICAN on working capital management, which was on working capital cycle, was May compulsory question number 1A, May 2023. The name of the company was Vesta Pricing. Okay, Vesta Pricing. So I've changed it to Berlusconi. So Vesta Pricing. So this is the question here. I need somebody to read for us. Somebody should read. Who will help us? Abdulatif, you'll be disturbing me. Yeah, read.
Okay, can you hear me, sir?
I can hear you clearly.
Okay. Berlusconi Limited is a manufacturing company located in Port Harcourt, Nigeria. The company produces a trading device
A tracking device?
a tracking device that is attached to motor vehicles. The device is designed to help locate the whereabouts of stolen motor vehicles within the country. The company capital for cash operating cycle is the length of time between the payment for purchased materials and the receipt of cash from selling the goods made to the customers. The table below represents the information attracted from the annual account,
Extracted
from the annual account of Berlusconi Limited for the past 3 years.
Yeah.
All figures are assumed to be correct, sir. Can I proceed?
Yep.
Other information is as follows. A, all purchases and sales are on credit. Okay. Abi?
Yeah.
Okay. Direct wages 2021, 300,000. 2022, 250,000. Production expenses 2021, 72,600. 2022, 171,995. 4. The company policy is that any data that will be used from the statement of financial position is determined the working capital cycle period will be average based. Okay, that's fine. Required. A or 1. Compute the cost of goods sold for 2021 and the 2022. 3 marks. Requirement 2. Calculate the length of the working capital cycle, assuming 365 days in the year for 2021 and the 2022. 7 marks. 3. List the actions that the management of the company might take to reduce the length of the circle.
Thank you
That's
very
just
much. Thank you.
focus.
That is the question. So requirement one says that you should compute the cost of goods sold for 2021 and then the 2022. Like I said, cost of goods sold is the same thing as cost of sale. You will recall that when we had operating statements, especially marginal costing, using marginal costing technique, cost of sales is opening stocks plus um, raw material purchase for the period, all those raw material, direct labor, direct expenses,
Minus
variable
storage.
overhead, you have cost of goods available for sales, isn't it? Then you less your
Yeah.
closing stock to have your cost of goods sold. So that's what the examiner wants you to calculate. So you want to calculate cost of goods sold. So in this question, we have 2020 and 2021 to 2020 to 2020, 2020 to 2022. Now, an examiner has told you that all these figures that you have here, they are based on they are numbers as at the end of 2020 and 2020 to 2022. So it's as at 31st December of each year. So which means that examiner now wants you to calculate for 2021 and 2022. So all these figures are closing figures. Whatever the figures you have for 2020, 2021, 2022, they are closing figures for each year. So if you now want to calculate for 2021 and 2022, the closing figure in 2020 will become opening figure at the beginning of 2021. The closing figure of 2021 will become opening figure at the beginning of 2022. So if that is the case, how do you then calculate the cost of goods sold? To get the cost of goods sold, in this question, in this particular table, you have inventory. Inventory includes raw material, work in progress, and finished goods. You also have purchases of material. All right. Then, not only that, examiner also told you in the question that you have direct wages. You also have production expenses. So all of this is what you are going to add together that will give you your cost of goods sold. So to get the cost of goods sold, first of all, for material, you determine what is the opening raw material minus the closing raw material. It will give you the raw material for the year. Opening work in progress minus closing work in progress will give you the exact work in progress for the year. Opening finished goods minus closing finished goods will give you the exact finished goods for the year. So, of course, that will be the inventory. Then you now had the purchases. You had the purchases. Then you now consider, then you then had direct wages, then production overhead. That's what you need to do. Once that is done, of course, you are going to have your cost of sales for each year. That will answer that one. It's just 3 marks. Where you have major work is the second one, which of course, that one will attract 7 marks. But in any case, let's look at the solution here. Again, there's no need for you to be doing all those categorization, direct material, direct labor, it's a waste of time. All you need to do, just module everything together, add everything together, you get your answer, move on from there. Now, this is what I'm trying to say. For the inventory, you then go to 2020. The closing raw material in 2020 will become opening raw material in 2021, which is 108,000. So in 2021, at the beginning of 2021, this is the opening raw material. Now, the closing raw material in 2021 is the figures given to us for 2021, which is 145,800. That's the closing raw material in 2021. So you less. So there's no need for you to find the difference between the two. Just ignore. You don't have time. This is just for 3 marks. You do the same thing for 2022. The closing raw material in 2021 of 145,800 will then become opening raw material at the beginning of 2022, which is 145,800. Then in 2022, the closing raw material is 180,000. So that's the 180,000 that you are seeing here. So again, no need for you to find the difference. After that, the next item will be that, okay, the raw material purchase. Examiner has told us that the purchase raw material. The raw material purchase for 2021, the raw material purchase in 2020, you don't do opening or closing for raw material purchase, all right? So in 2021, raw material purchase is 702. In 2022 is 720. So you put it there for each year, 702, 720. Then you also move on to opening work in progress. Opening work in progress. The work in progress in 2020, the closing work in progress in 2020 will become opening work in progress in 2021. That's 75,600 you are seeing there. In 2021, the closing work in progress is 97,200. That's the 97,200 you are seeing here. All right, so you less. Okay, then you go to 2022. In 2022, the closing work in progress for 2021 of 97,200 will become opening work in progress. Then in 2022 itself, closing work in progress is 93,360. So that's the 93,360 you are seeing there. You find the difference. Okay. Then the last one is finished goods. In 2020, the closing finished goods of 86,400 will become opening finished goods in 2021. That's opening finished goods. In 2021 itself, the closing finished goods is 129,600. So you find the difference as well. That's 129,600. As we are moving to 2022, beginning of 2022, the closing finished goods of 2021 of 29,600 will become opening finished goods. So at the end of 2022, the finished goods is 142,875. 142,875. That's the closing finished goods. So if you like, you can just find the difference. If you like, you can ignore this part. You can ignore this one. Just carry on. So examiner is not asking you for all this structure. All right, so you can ignore all those segmentation. You can ignore it. Then the next item is direct material. You are told that in 2021, direct material is 300. In 2022, direct material is 250,000. So 300 direct wages, then of course 250. Then also production expenses for 2021 is 72,600 and then 171,995. So you put it there for each year. At the end of the day, this is the cost of goods sold. All right. And this is cost of goods sold for 2022. Take 3 marks, you put it there. All right. So that is for that. The second requirement of the question, okay, you have to calculate the length of the working capital cycle, assuming 365 days for a year, okay, for both 2021 and 2022. You will recall that when Abdulatif was reading it, he mentioned that examiner told you that the figures to be used to compute the working capital cycle must be average based. It must be average based. So what that means is that whenever you want, if you want to calculate your raw material conversion period, it will be opening raw material plus closing raw material divided by 2, then all divided by the raw material purchase. All right, multiplied by 365 days. Examiner also wants you to assume 365 days, which means that examiner wants everybody to achieve the same result. You must have a uniform result. That's why examiner was specific that you should use 365 days, because at times, if examiner leave it blank, open, some segment of the student can assume 360 days for a year. Another segment of the student can assume 365 days. Whichever one you use, you are correct. But in this particular instance, examiner wants everybody to use 365 days for a year. All right? So that is, and you have to use what examiner has asked you to use. Don't follow your interests. You have to follow the interest of the examiner. That's what the examiner wants you to do. So in this case, how do you then compute this? Now, before you get your working capital cycle, you have to do your workings. All right, you have to do your workings. So one after the other. All right. So the first item is to compute. You go and do your working for raw material conversion period. Examiner has told you to use average figures. Therefore, you need to go and compute average raw material divided by purchases multiplied by 365 days. So to get average raw material for 2021, you are going to pick the opening raw material. Opening raw material is 108,000. This is it here. Opening raw material is 108,000 plus closing raw material of 145,800. You add the two together, you divide it by 2. That will give you the average raw material. So that's what I've done here. Then multiply with 365 days for a year. Of course, you're supposed to divide with the purchases. Purchases is 702,000. Purchases is, this is it here. Here is the purchase. Raw material purchases, 702,000 for 2021. Okay, so then when you put everything in the formula, we have 66 days. You then go to 2022. For 2022, the closing raw material in 2021 of 145,800 will become opening raw material plus the closing raw material for 2022. All right. Closing raw material for 2022 is 180,000. You then divide it by 2. That will give you the average raw material. So divided by 2, we get average raw material. You now divide everything by the raw material purchases of 720,000. Then multiply by 365, and we got 83 days. Once you have that ready, then you go and post. All right, here is 66 days. Here is 83 days for 2022. Like I said, if you like, you can call it raw material conversion period, or you can say number of days. Number of days, raw material is held in store. All right, then you put your figure there. However you want to put, whichever one you do, examiner will mark it for you. Then the next one is to compute the work in progress conversion period. You only calculate work in progress conversion period or raw material conversion period if you have it in the question. Anyone you have is what you are going to compute for. All right, but in this question, we have everything. So the next item will be the raw material, will be the work in progress conversion period. So to get the work in progress conversion period for 2021, using average figure, you are going to pick the opening work in progress of 75,600. You had the closing work in progress of 97,200. You then divide the two, you divide it by 2. Then everything divided by cost of sales. Cost of sales in 2021 is 972,000. That's the cost of sales, 972,000. Okay, so work in progress is when you do that, the average work in progress is 32 days. Okay, that is, it takes this company 32 days to convert raw material to work in progress, or it takes the company 32 days in the product. The company was in production cycle for almost a month, all right, for almost a month on the average, all right. Do the same thing for 2022. The closing work in progress in 2021 will become opening work in progress in 2022 plus the closing work in progress in 2022 of 93360. You add the two together, you divide it by 2. That will give you the average work in progress. Then you now divide everything by the cost of goods sold for 2022, which is 1,088,000. Then, of course, whatever you have, you multiply with 365 days. We have 32 days. Again, 32, then you go and post. Your work in progress conversion period is 32 for 2021, 32 for 2022. Again, you can call this one number of days, number of days in the production cycle, number of days in the length of time, the length of time. You can say the length of time, length of time in the production cycle because of time. So in the production cycle, I don't need to, yeah. Then the third one is finished good conversion period. So to get the finished good conversion period, you are going to pick the opening finished goods in 2021 plus the closing finished goods. You add the two together, you divide it by 2. That will give you the average. Okay? So 86,400 plus 129,600 divided by 2. It will give us average. Then you now divide it by the cost of sales of 972,000. You multiply everything by 365, we have 41 days. You do the same thing for 2022. The closing finished goods in 2021 of 129,600 will become opening finished goods in 2022, plus closing finished goods in 2022 of 142,875. You add everything together, you divide it by 2 to get the average, then you now divide everything by the cost of sales of 1,098,360. Multiply with 365 days, then you have 45 days. So 41, 45 days. Then you go and post 41, 45 days. If you like, you can call this one number of days finished goods is held in store. All right. Or you like, name it as finished goods conversion period. All right. Then the next one will be the debtors collection period or debtors conversion period. That is number of days credit is given to customers. How do you do this? Examiner has given you in the question that debtors, according to in the table given to us, trade receivables, that's your debtors. In 2020, the closing debtors is 172,800. Of course, that will become opening debtors in 2021. Therefore, 172,800 plus closing debtor of 259,200 divided by 2. That will give you the average debtors or average receivables. All right. So average receivables divided by the credit sales. According to the question, credit sales is why is that again? Credit, yes, this is the
All sales are
sales.
assumed to be credit.
So sales in 2021 is 1,080,000. Sales in 2022 is 1,118,000. Those are credit sales. So in this case, I would then say, of course, after I found the average, I will divide it by 1,080,000 multiplied by 365 days. We have 73 days. The closing receivable in 2021 will become opening receivable in 2022, plus the receivable of 2022, which is 297,000, divided by 2, we get the average, then divided everything by the credit sales, multiplied by 365, that's 85 days. Again, go and post it, 7385. 7385. So you are going to add everything together, add all of this, add all of this. We have 212. That 212 is the gross working capital cycle. The 245 is also gross working capital cycle. Finally, I need to calculate creditors payment period or number of days credit is taken from the supplier. To do this, you are going to pick opening creditors for 2021. The closing creditor will be the opening creditors in 2021 will be the closing creditor of 2022. That is your creditor is your account payable. All right, that's the account payable. All right. So payable, the opening payable in 2021 is 86,400 plus the closing payable of 105,300. You divide it by 2. Then everything divided by the purchases. Purchases in 2021 is 702,000. And that's what you have here. 86,400 plus 105,300 divided by 2, or divided by 702. Then multiply everything with 365. We have 50 days. Do the same thing. The closing payable in 2021 will become opening payable in 2022, plus the payable of 126,000 for 2022. Add the two together. You divide it by 2 to get the average, then all divided by the account, divided by the credit purchases. They multiply everything with 365 days. We have 59 days. So in that case, you are going to minus 50 days from 212, we give you 162 days. 59 days from 245, we give you 186 days. That represents the net working capital cycle. So it means that it takes the company 162 days, almost half a year, to turn around, to recover the cash that has been spent. You can imagine almost 6 months, for the company to convert the cash to raw material and to finally receive cash from debtor. So it takes the company 162 days, almost 6 months. That's too long. That's too long. It means that capital is tying down without yielding any return, which is not, this is not good for working capital. This is not a good working capital management strategy. That's too long. In fact, even worse, in 2022, this has increased to 186 days, half a year plus. This is too long. And then, of course, so that is what examiner wants you to do in that requirement number 2, 7 marks. You must follow the instruction of the examiner. You don't do otherwise. If you do otherwise, you are going to be penalized. In this question, the examiner wants you to use average figures. That's number 1. Then number 2, examiner also told you that you have to use 365 days for a year. If you do otherwise, you won't earn your full mark. You are not going to earn your full mark. Whether you like, if you like, get it correctly. Provided you did not use 365 and you did not use average figure, you can never earn your full mark. If you are lucky, you can just get 2 or 1 because you did not follow the instruction. You are being stubborn. So you have to be very careful. At times, it may be due to negligence or your own ignorance because you are not paying particular attention to the dictate of the question. So please, you have to watch out before you put your pen to paper. But if the examiner did not tell you that you should use 365 days, you are at a liberty to either assume 365 days or 360 days for a year. If you are not told to use average figures, don't go and be using average figures. In this case, you are going to do it separately. You do for each year. You are not going to be making opening plus closing. You are not going to use opening plus closing to get average figure. Just go ahead, do it the way it is given in the question. All right. So that is for that. Then requirement number 3 of the question, you are to list the actions that the management of the company might take to reduce the length of the cycle. How do you reduce? Like I mentioned to you, 162 days, 186 days is too long. Capital is tying down without yielding any return. It's not good. It's not a good working capital. It's not an effective way of managing working capital. Therefore, what should the company do to reduce the cycle? That's what the examiner is asking you. List. You are asked to list the actions that the management of the company might take to reduce the length of the cycle. Now, to do this, you are going to be commenting on each of them. How do you reduce your raw material conversion period? How do you reduce your work in progress conversion period? How do you reduce your finished goods conversion period? How do you reduce your debtors collection period? How do you manage how do you reduce, or are you going to reduce, or you are going to increase creditors payment period? All of this, you must know what to do. That's what the examiner is asking you. That is the action. What action do you need to reduce your raw material? Of course, To reduce your raw material conversion period, you can reduce the raw material quantity, the quantity of raw material kilogram that you need for production. You reduce it. Once that is reduced, then, of course, that will reduce your raw material conversion period. Or the company can adopt just-in-time system,
Just in time, yeah.
whereby you request for the material only when you need it. All right, you request for the material only when you need it. This is what you have here in the material. The raw material required for production may be reduced to a smaller quantity, or Berlusconi, in this case, Vesta pricing, as you have it in the main question. Limited can adopt just-in-time system, whereby the material will be requested only when needed. Then, how do you reduce your work in progress conversion period? To reduce the work in progress conversion period, the company can introduce advanced model machine. You know, when you are in the production cycle, that means you are producing, you are converting the raw material to work in progress, or to finished goods, rather. You are converting the raw material to work in progress. You are in the production cycle. Because you are in the production cycle, you are using machine to produce. So if the machine is obsolete, or machine is already worn out, or the machine is old, of course, it will slow down production. You are going to stay more. You are going to stay longer in the production cycle. All right. But if the company purchase advanced model machine that have the capacity to produce better and high quality products, then of course that will reduce the cycle. Please give me 1 minute. So that's how to reduce the work in progress conversion period. That is, the company should purchase advanced model machine that has the capacity to produce better and high quality products, all right, at a faster rate. So with this, that will enhance the production efficiency, okay? That will enhance the production efficiency. Then how do you reduce the finished goods conversion period? How do you reduce the finished good conversion period? To do this, the company can engage, okay, the company can, once the raw material conversion period has reduced, your work in progress conversion period has also reduced. Of course, certainly that will also reduce the finished goods. But the main thing is that to reduce your finished goods is already in the warehouse. It is that finished good you take to the market to sell. How do you ensure that you sell the finished goods quickly as possible? Of course, to do that, the company can engage in aggressive marketing to increase sales and reduce the number of days the finished goods is held in stock. So when you look at this question in our calculation, the finished goods conversion period, according to the question, based on our calculation, is 41 days in 2021, then 45 days in 2022. So what we're now saying is that this for 2021, the goods stayed in the store or in the warehouse for 41 days before being sold. All right, you can imagine if this is a perishable goods, that will result to financial losses to the company. So you need to avoid that. To do this, what do? You engage in aggressive marketing. The company should engage in aggressive marketing to increase sales, all right, in order to reduce the cycle. That is what you need to do under finished goods. Then for the trade receivables, how do you reduce your debtors collection period? How do you reduce the debtors collection period? To do this, the company can offer early settlement discounts. When you offer discount to the customer, they will be encouraged, they will be motivated, they want to pay cash immediately. Or the company can review the credit terms. If the credit term, for example, is for 30 days, that customers should pay for within the next 30 days, you can reduce it to 15 days or 20 days. Once that happens, of course, that means you are going to collect your money quicker, all right? Or the company can engage the service of a debt factoring or of a factor. The company can engage the service of a factor. A factor is an intermediary, is a company that stands between the company and then the debtors. So instead of the company to wait until the due date for the customer to pay the debt, it is the factor. The factor will buy the debt at a discount, maybe at 95% of the value of the invoice. Then, so it is the debtor, it is the factor that will be chasing the customers going forward. So the company has nothing to do with the customer again. Of course, the company will need to link the debtors with the factors. We link the debtors with the debtor with the factor, so that once the debtor is aware that there is a new company that will be collecting the money, of course, that will also prompt them to pay their whatever they are owing as quickly as possible or at the due date, because you don't want any embarrassment. Okay, so that is how to reduce the debtors collection period. That is two things I mentioned there. One is for the three things. One is for the company to offer early settlement discount to encourage customer to pay on time, to pay cash. All right. Then two is to review the credit terms. If the credit terms is for 45 days, you can reduce it to 30 days or even less. Or you engage the service of a factor, of a debt factor, which will help you. We will purchase the invoice amount at a discount, and then we'll be the one to be chasing the debtors going forward. All right. Then the last one is also how do you reduce the creditors payment period? How do you reduce the creditor payment period? You don't reduce this, rather you increase it. All right. You increase the creditors payment period by delaying payment to the supplier, or you negotiate it. When you delay payment to the supplier, that means you did it, you are doing it intentionally. When you delay payment to the supplier, then that may impair the creditworthiness of the company, meaning that because there will be a negative repercussion to that, there will be a consequence if the company delay payment to the supplier. Because if I'm your supplier, for example, now I'm your lecturer, and as the owner of the tuition center, you are supposed to pay your tuition fee within the next two weeks. So when it is expected that you are going to pay within that 2 weeks. If you know that you don't have the capacity to pay within the next two, what do you need to do? You approach the center. Please, I was expecting to pay you in the next 2 weeks, in the next few days, but the money is not available now. Please give me the month end. I will pay. There is an understanding. But if you do it intentionally, going forward, when you come to professional level next time, when you move to professional level, I won't allow you to stay in the class. You have to pay me full. You have to pay me in cash before you join the class, because you are not credit worthy. That's the implication. So it's the same thing for a company, like in this case now. So you can't just delay payment to your supplier intentionally. The most important thing to do is for you to negotiate, because once you delay payment, that will erode your reputation. That means you are not credit worthy. So the most important thing you need to do is to negotiate for better and favorable credit terms with a supplier. That's all you need to do. So it is only when you do all of this that you are going to earn your 15 marks. Remember, this question is for 15 marks. There are A and B to the question, the compulsory question. The second part of the question relates to risk and uncertainty, that is decision-making under uncertainty. So when we get to risk and uncertainty, we are going to do the B part of this compulsory question. So that's all for today. Let me know if you have any question for me. Somebody is asking me. Moses is saying that, Mr. Are you still solving another question? No, it's already time. I think Mr. Ashiwaju will be taking it today. Is it yesterday was PM, right? Did you do PM yesterday?
No,
No.
it should be FR. Mr. Wasi.
So FR, rather FR. So you're having FR today by 8:30. So yes, Latif is saying produce according to order. What do you mean by that?
That's as per this finished goods.
Okay, as the customer is requesting it.
Yeah.
Once you have customer order, then you produce. Well, you can do that. Yeah. That will also reduce the again, so many things can happen. That can disrupt your production because if customer order and you don't have the material in store, what will happen? So it can destabilize whatever you want to produce. So the best thing is you must have the minimum level of inventory that you should keep. At least once you have the order, that you'll be able to produce quickly, or you inform your supplier on time that, please, I'll be needing I'll be needing so much quantity by so date, so that once you have the order, the supplier will come and deliver. Then, yes, somebody is raising hand. I think the first person was Oliver. Oliver, yes,
Yes, sir.
please. Yes, talk to me.
Okay, my question is this, the five elements that makes up the working capital cycle, are they universal standard that guides it? Take for example, if it takes 30 days, you sell, and after 30 days you expect people to pay. Is there any standard that said that okay, it shouldn't go beyond 10, 15 days or 20 days
No, no,
maximum? No.
no, no, no,
So it's
no.
a company decision to decide
It's
when what to do.
hold on, I've heard you. The thing is that every company has a policy and there's also industry standard. So if the within the industry, if the credit terms generally on the average is for 30 days, a company may give 45 days just to encourage customer. Another company may give 15 days below the industry average. Another company
Okay.
may stick to the industry average. So what the most important thing, everything is borders on the policy of the company or the guideline of the company. So whatever the guideline the company has set is what the company will follow going forward. All right?
Okay. All right, sir. All right, sir.
Yeah,
Thank you very much, sir.
you're welcome. Moses,
Yeah,
yes,
yeah, John, well done, sir.
you're
So
welcome.
the chat I sent, I'm not saying if you are having another question this night. I'm just asking that are we going to have another illustration after today?
No, this is no,
This
after
is
today,
the only
certainly.
illustration under this topic.
Let me land. You have asked question, you have not allowed me to answer.
All right, sorry, sir.
So this cannot be the only. There are so many illustrations we are still going to solve on this. In fact, I doubt it. We can't even complete it in our next class. So we still have a lot to do.
Okay,
All right.
okay.
So I have two additional
Okay.
more illustration on this. Then before we move to inventory management.
All right, that's what I want to ask.
Yes, Abdulatif, what's your question? Quickly.
Are you the only teacher or lecturer we'll be expecting tomorrow or alongside with Ashwaju?
Ashwaji is not taking you tomorrow. Ashwaji has you tomorrow in the evening, normal time. No, tomorrow is Wednesday, right? No, Ashwaji has you today. Was it today or yesterday? Yes, Ashwaji we have you today. PM is today. Ashwaji will have you by 8:30 today. So, yes.
Okay, sir.
But tomorrow, Mr. Idris is taking you tax as well as a PSAF. All right.
Okay, sir.
So
Yes,
I'll
sir.
be having you tomorrow. Mr. Idris will also have you. So that's the information I have for now. I don't know if other person will want to schedule you for tomorrow, but it's a given that you are going to have PM, you have tax, you also have PSAF.
Okay, sir. Thank you.
Okay, so that will be that from me to you. I will see you tomorrow by the grace of God. Like I said, tomorrow will be a combined class. We are not going to do working capital management. We are going to, since it's a combined class, we are going to do a separate topic uh, that will cover, that will be suitable for everyone. So, yes, thank you guys. I will see you tomorrow by the grace of God. Bye-bye.